much for taking the time to join us today. My name's Toni Enderli. I'll be your host for today's webinar. Thanks for taking the time to join us. Today I'm going to be covering basically what's happening in the property market, what's been happening, where's the market going, then a couple of other, we get this every day from clients, Toni, should I rent and wait for the market to recover versus buying? So I'm going to be talking about renting versus buying. And then also, is property still a good investment? Should I buy property versus other, asset classes and diversification? So chat about that. And then I'm going to give you a little bit of a highlight on Ihlathi in Parklands and what it consists from an investment point of view and a first-time investment point of view. A little bit of background for myself. Very privileged to be part of a family business. We were one of the first real estate companies in Joburg 42 years ago. I remember I love telling the story of my dad buying some land with a gentleman with a handshake, and he promised the builder that, listen, once he's built on his properties and sold it, he'll give him money on those plots. Those plots were sold at 5,000 Rand a plot in Flamingo Flay when it was just bushes. My mom ended up sitting in a caravan in the bush and selling those properties off plan. And then if you look at what's happened in this area over the last 42 years, is actually, it's just amazing. I've been specializing in new developments for the last 22 years. Most of the developments, sectional title developments, a big portion of them we've marketed. So our role is marketing, communication, and strategy, where we give insights to developers, what to build, what sizes, what pricing, what sort of specifications. We help from ground level on, and then we roll that out, hand it over, and we do a full turnkey development. So we've got about 70 realtors in Cape Town. We do have an international network in America, Switzerland, Europe, and we're very excited to be dealing with the developer, which is International Housing, which I'll get a little bit more in detail. Before I go through to the actual developments, I wanted to give you a little bit of a rundown what's actually happening in the market. I really love showing this graph and what population growth has been doing in Cape Town. Population in Cape Town sitting at around 4.6 million. This is really the drive of people, and one of the biggest essentials, people want to own their own property. I think everyone has a right to own their own property, and with all the doom and gloom and everything else, people need to understand what's actually happening with real data. And that's where we to guide our clients. So in Cape Town, population growth had 30% population growth in the last 15 years. We also have had a massive driver of people wanting to buy in Cape Town, especially the Joburg area, because of the lifestyle, because of the good value of money, and what you're getting for your rand. Then other exciting elements is the interest rates, lowest it's been in 47 years. In my 22 years, I've seen the property market go up and down, 4 times. It's never a bubble, guys. Everyone talks about a bubble. There's no bubble. It's just markets go up and down. We're at one stage, capital growth is between 22 and 30%. That is not normal. Your growth should be between 7 and 10%. That's where we like it. And interest rates now the lowest since 1957. At a prime rate of 7.75. So it is a really, really good time to buy. So answer your question, it is really the best time to buy property. The interest rates are the lowest. Banks are lending. Banks are giving 100% bond finance. They're aggressive. They want to lend. Our approval ratios are sitting between 80 and 85%, meaning every bond that we send to the banks, 80 to 85% of those bonds are approved. Yes, we're going to have a little bit of over the next 3 and 4 months, that could drop a little bit because of people's earnings and COVID-19, but I do believe over the long term that is going to recover over the next 3 to 6 months. And then just to give you an indication on what this repayments and interest rates have done. So if you're looking at, let's just say, a bond of R1 million at 9.75, which was at the beginning of this year, you would have paid around 9,485 Rand. And then if you're looking at it now, it's 8,200 Rand, so it's a saving of 1,276, and it saves you around 306,000 of interest over 20 years. Now, the big element on this is that if you were looking to buy a property at the beginning of the year, you are now able to qualify for more because the interest rates have come down. So that is going to really help the market. This is a really exciting graph in my eyes. A lot of people say doom and gloom for the property market, prices are going to drop. Guys, you need to know and understand where to invest. So yes, luxury property market is taking a little bit of a beating with negative growth. Buyers, it's a buyer's market. There's more for them to choose from. And the big reason, and this graph shows it, is if you look in the last, I would say 16 months, 5% of the market were properties that sold over 3 million. So out of the whole market, and this is linked to the deeds offers, over 5% was sold 3 million plus. So houses sold 3 million above was only 5% of the market. 16% of the market was from 1.5 to 3 million. 25% of the market from 800 to 1.5. 25% 400 to 800. So that tells us that the market under 1.5 is the strongest part of the market. That's where you should be investing. The bread and butter, under R1 million, it's easier to rent out properties. If you're wanting to sell it down the line, there's more people in that market to be able to buy it, to be able to rent it. And I would rather have 3 properties under R1 million paying me rental than 1 property at, say, 3 or 4.5 million. You're getting yields, better yields. It's easy to manage. If something happens and you need to sell 1 property, you don't have all your money in one basket. This is current provincial inflation status. So Western Cape sitting around 3.6%, still one of the best in the country. The average national inflation, that's capital growth in the property, is sitting around 2%. So we're still better than your average. This graph really shows us, and this is what I was saying in the last slide, is that if you look at the lower property values, so if you look at 700 to 1.5 million, 700 to 1.5 million, which is the green, properties are still increasing. The low income between 250 and 500 is still getting growth at around 10%. And the reason for that, it's simple. There's just more people in that market. The luxury market, you can see, is negative growth, and that's the main reason. There's just less buyers in between that 5 and 20 million rand price bracket. So I think that is going to take another 12 months for that market to recover. Business need to start doing well. You need cash flow. The economy needs to kick in. But I do believe with inflation at its lowest, petrol at its lowest, interest rates at its lowest, I'm the internal optimist, but I do believe that things are going to start getting better as soon as we get through this virus. But the price brackets that you need to stick to is under R1 million. Is property still a good investment? Absolutely. I don't, if you look at what happened through this virus and what happened to the stock markets globally, close to 45% drops. Guys, there's been no properties dropping at 45%. Even in the luxury markets, there's been certain sections here, the guys that have to sell quickly, maybe 20, 30 maximum. But if you look in real terms, you're probably going to get 2-3% capital growth. Property is always a long-term investment, not a short-term investment. Still one of the best asset classes, because at the end of the day, it boils down. You've got a tenant coming in. You've got someone that wants a roof over their head. Cape Town is the place to be in South Africa. It's got the lifestyle. It's got the West Coast, East Coast. Cape Town, mountains, vineyards. It is just an amazing place to live, and it's probably the best city in the world to live on how we live. So I think that Cape Town will always do well, and the Bloberg surrounding areas have always done well. It's the fastest growing suburb in the whole South Africa. It still is. The reason, the availability of land, number one. Number two, the cost of land is a lot cheaper. For example, where can you buy something southern suburbs or Woodstock? You're going to be talking, 1.5 million rand for a studio, 30 square meters in Woodstock, and those sort of sites. So if you're looking at getting into the property market under R1 million, where are you going to buy? So we're super excited to launch Ihlathi in Parklands. Parklands, to give you a little bit of a rundown, Parklands has done extremely well. You've got a couple of private schools. You've got Parklands College, Alcana, CBC, Cura. You've got 4 amazing retail elements with the latest at the Table Bay Mall. You are literally really close to the beach. the My City bus lane. You've got the feeder systems within the community. So 500 meters on every household, there's a feeder bus of the My City that allows kids and families to utilize without using cars, which is one of the first in and only in Cape Town, having a feeder system within the system. Schooling is amazing, retail is amazing, it's a great lifestyle, it's close to the beach, 20 k's from Cape Town. Some really exciting news in Parklands, which we've been involved in. There's a whole new business district which has been built where our offices are in Sandown Road, and the first international university linked to Cambridge will be opening in June, July. That is going to be massive. Now, all of a sudden, the Parklands area, it's got private schools, public schools, it's got a university, it's got a business district, and you've got retail elements, you've got public sectors, you're right next to the beach, you're close to Cape Town, and you can get into a property of starting out with us 600,000. Everyone's goal is to move closer to the beach, so you have a lot of people buying in Parklands and then moving up every 4 to 5 years. So very, very exciting. The Ihlathi is 384 units. It consists of 1 and 3 bedroom options. The 1 bedrooms range at 689. It's fiber ready, solar geysers, 24/7 security. The garden units have enclosed gardens, 20% water savings and energy savings. We, with the Green Building Council, we use a green technology called Edge, which is certain building requirements, which brings the sustainability of the development a lot better. Water is prepaid, electricity is prepaid, and it is situated on the corner of Parklands Main Road and Sandown Road, right next to the nature reserve. So it's a really good entry point of people needing to go to work. You go into Sandown Road, onto the N7 or the R27. It is right close to the university, which is going to be opening, which they're talking 10 to 20,000 students over the next 10 years. So imagine a UCT on your doorstep. So this is very, very exciting for community and for the Parklands area. And the site, this is a site drone shot of the site. We've already moved on to site. We've started doing the services. As soon as we get to level 2, the construction will start. And it is a prime route on the corner, the main entry on Sandown Road, and you've got the nature reserve. So nothing will be built on the right at its own community. Basically big communal park area with water features, braai areas. Each unit's got private garden, 24/7 security. The security has been very successful with regarding to number plate recognition, cameras. Any guest that comes through gets registered, and that's been really the success of our developments. Like I said, construction started already. Completion date, with the delays now with COVID, we're looking at realistically July, August next year. Financials, a 15,000 deposit once an offer to purchase is signed. It includes all transfer costs. The only thing it would exclude is bond costs. The builders are Damar Construction since 1973. International Housing Solutions, one of the biggest funds in South Africa. It is absolutely amazing to deal with international housing. We've been dealing with them for the last 7 years, amazing track record, and their mandate is to really bring homes and properties to the market that is needed. And if you look at my first graph, where I showed you the demand in property, 80% of the property market, the demand is basically under R1 million. International Housing's mandate is to deliver homes and housing under the R1 million price bracket. So for us, it's an absolute privilege to have this well-priced developments in conjunction with Better Bond. Better Bond has approved the development with all the banks. So all the banks has pre-approved it. They have vetted the professional team and the developments. The finishes are high quality with tiles right throughout. You got engineered stone, oven knob, extractor fan. So really good quality of finishes, and really the breakdown on it. And you know what is exciting to see with the interest rates that have dropped, the opportunity for clients to get into the market is this is the best time to get into the market. Reason why I say that, if you buy a unit today in Ihlathi, we get your finance approved. By July next year, that's only once it registers. So only July next year does your bond kick in. By that time, you will either move in or you put a tenant in. And if you look at what you're actually putting, you're putting 15,000 Rand down. When the property registers, your bond repayment will be 5,600 on a one bed of 699. Your rental income from day one is 6,000 Rand. And guys, these are realistic rentals. This is not inflated rentals to make the figures look. These are what we're getting today, and there is a big demand in that rental price bracket between 6,000 and 8,000. So rental income is 6%. It gives you a yield of 10% and capital growth of 4%. So if you look at your capital growth in year one, you would have got the money that you put down as a deposit, and if you put a tenant in, your bond's covered. That for us is really, really exciting. The 2-bedroom units, you're looking at 749. Deposit of 15,000, a bond repayment of 6,034, rental income, that's what we're renting out today, 7,500 Rand. So you're looking at a net yield of around 11%, capital growth of 4%. Guys, you don't get any other properties in Cape Town at these prices. And the reason for that is our client's mandate is to deliver properties under $1 million price bracket. Our 3-bedroom units, 3 beds, 2 bars, 1,249, your repayment of 10,139, rental income of 10,500, net yield of 10%. So this is an opportunity and development which will do really well. We've in the last 2 years, we've built and been involved with another 1,000 units of international housing. The 50% they've kept from the investment portfolio. The other 50% we sold. We sold most of those units all out before they were even completed. To give you a good indication, we sold those units, 2 beds, 2 bars, 899. Those units now are selling at 1.1. That's a year and a bit later. So we're promising around 4% capital growth, which we think is realistic. Our units that we took to the market has been between 10 and 12%. Then one of my questions was, Tony, should I rather rent before, I buy? And this is my really answer to that is, if you're renting right now at 7,500 Rand a month, and if you say you're renting for the whole of 2020, you're basically losing those 12 months, you're losing 90,000 Rand. So let's say you rent for 5 years, because you're going to rent, you want to save your money. If you rent for 5 years without escalation on the rentals, you're basically losing 90,000 Rand a year. So that's going to leave you with 450,000 Rand that you've lost over the 5 years. But you haven't just lost that, because if you actually had bought a property, you would have had capital growth. And as one of my first graphs show you, capital growth is sitting around 4%. So in 2020, you would have made 37,000. In 2021, like 39,000. So over those 5 years, you would have lost 205,000, which means your rental that you've lost for 5 years plus your capital growth works out to 655,000 Rand that you lost. You could have bought that unit cash, basically, or you could have put a bigger deposit on one of the bigger units. So it is still better to buy property than to rent property. The inflation is low. Interest rates are low. Banks are lending money. And just to go back on that, so in year one, on an investment of 900,000, you would have earned 37,000 Rand. You're only putting down 15,000 Rand, and you're making 100% on your money back, because the bank, you're not putting everything down cash. The bank's giving you the money. So the recommendation is 2 things. I have a lot of clients get a good job, they go buy a car for 800,000 Rand. The repayment on the car is 10, 11,000 Rand. Over 5 years, when they try and sell that car of 700, 800 is now worth 400,000, 500,000. So they've lost half their asset value. That doesn't make any sense. Number 2 is we see a lot of clients trying to get a bigger house from an affordability point of view. Guys, if you look at long term, over the next 20 years, if you retire one day, how are you going to retire? Obviously, you're going to have your retirement funds, which I don't personally believe in. Property is definitely the better way to go. The reason why I say that, imagine you could buy 5 properties over that 20 years, or 10 years. There are 10 properties over those years. Imagine those properties were paid for and bringing you income. Every year you're going to have capital growth, appreciation on that asset. That's number 1. And number 2, you're going to get a rental return. That's retirement. So instead of going to go buy a big house of 3 million or 4 million, if you can afford that, start small, buy investment properties. And at the end of the day, if you're living in a big house of 3 or 4 or 5 million rand, that is not really an asset. It's a liability. It's costing you money. Yes, it's an asset because you're getting capital growth on that property, but it's a liability because it's costing you rates and taxes. You're living, it's not bringing you income. Rather buy a smaller house and an investment property. That investment property is going to bring you income. That's a proper asset. So that is our investment webinar for this afternoon. And our team, Samantha and Jason, are the head agents on this group. We've sold close to 30 units already in Ihlathi, and we are very excited to help you if you've got any questions. This presentation has been recorded, and you'll all get a recording with the latest price list, reservation agreement. If you want to get pre-qualified to see if you qualify first, our team is ready and waiting. And yeah, I wish you guys a great day. Hopefully, we get some good news from our president, Mr. Cyril, this evening. Hopefully, we can get down to level 3 and 2 so our economy can start get going. Bottom line is the inflation, petrol price, all those levels are leading into a really exciting next 3 to 4 years. So, guys, thanks very much for joining us. If you have any questions, you're more than welcome to lift up your hand and ask any questions that you have. I will then put your mic off or mic on, and you can ask me any question that you might have. Just lift up your hand if you would like. No questions? Perfect. Guys, thanks very much for joining us today. I hope you found it informative. If you are interested in any of our units, there we go. Pumze, let me just open up for you. Hi there, can you hear me?
Yes, I can.
Perfect.
Can you hear me?
Yes, perfect.
So I'm relatively new to the whole property scene. I literally have a million questions, so I would rather have like a one-to-one chat with one of your team members. But
your
yeah,
number and then I'll give you a call after this.
Sorry, what did you say?
If you can just drop me your number and I'll give you a shout after this webinar.
Okay, great. Can I reply via email?
Yes, just
or
drop me a
is there
mail.
a way in which I can respond?
No, just drop me an email or you can drop a message on this platform. No problem.
Oh, okay, great stuff. Will do.
Perfect. I see there was another question, Timbela. Timbela, you can talk. Timbela, you can talk.
Hello.
Hi there, I can hear you.
Yeah, I also think I feel the same way as Pumze. I'm also new in this market,
Okay.
and I wanted to ask if you put an offer on a place right now with the interest
Yes.
rate at its lowest, as low as it is now, and
Yes.
you only start paying your bond next year, let's say in August, if the construction is done.
Yes.
What happens? Do you then get a choice to choose between a fixed
Fixed rate
bond, a fixed rate, or what? Because I'm trying to see now it's at its lowest. We don't know. I don't know. Maybe by August next year it won't be at its lowest. Maybe it would have gone up or something. I just want to understand if you get a choice.
That's a good question. I think that, at the end of the day, the banks are very aggressive in lending. Personally, I don't see the interest rates going up. They can't afford the interest rates to go up because the borrowing of credit then goes up. And I think it's going to take South Africa at least another 2-3 years to really recover on what's happened. So if this is just my recommendation. If you wanted a fixed rate, let's say the interest rate now it's around 7.75. the banks are going to give you a fixed rate of probably 2% above that. So, which means you need to risk and say, listen, what's the probability of interest rates going up by August next year? In my view, like none. And then if you go, you're going to pay 2% more just to protect yourself. So, at the end of the day, it really boils down to the interest rates will stay low like this. If you're it could go up maybe 0.25, maybe twice end of next year. So that's 0.5%. If you're going to fix your rate with the bank, you're going to lose out on that way. So I wouldn't recommend anyone fixing their bond rate in this market, especially for now.
Okay. And also, sorry, I'm trying to find here on the webinar, where can I send you my contact details if I want to get on a call with you?
I'll just give you my number for everyone, and you can drop me a WhatsApp. It's 082 497 4302. Everyone in this webinar will be getting an email with our team's contact details and a video of the webinar, and also the price list and information fact sheet. But my number is 082 497 4302. So more than happy to drop on a personal call with anyone that's got more questions or is unsure of anything. I'm more than welcome to chat to them, no problem.
Thank you.
Perfect. Thanks very much. I see there was another question. Lidokwa, you open to talk? Lindokwa?
Hi, Sean. Thank you for the interesting presentation.
Perfect.
Can you hear me?
Yeah, I can hear you, no problem.
Oh, yeah. The probably look at so really feel to, but I acknowledge more about the some I was your first.
You're breaking up completely. I don't know if your signal is a bit out of range. Can you just repeat that?
Yeah.
You're breaking up.
Oh, not sure. Okay.
I think it's your signal. If you don't mind, drop me a WhatsApp, and then we can get on a call afterwards, and we can discuss the questions that you have. So I'm going to give my number again: 082 497 4302. Everyone will get a copy of the recording, the presentation, with the fact sheet and price list of the units that we've got. We are offering a free management agreement. Anyone that signs the agreement in the month of May, which means that if you bought a unit for investment, we will find your tenants, do credit checks, source them, put them in, and we're not going to charge you for the first 12 months. So very exciting. If you're wanting to get into the market, is the best time. Please drop me a WhatsApp if you've got any other questions. Thank you very much for taking the time to join us today on this webinar, and we are super excited to help you on your new property. Thanks very much, and I look forward to chatting to you.